delivering this immediately after the cash close as normal. But just catching up on a few things, reviewing the day in its kind of entirety. And I was off the desk for the last couple of hours. Looks like I missed the bulk of some of the main price action, this being equities again on the back foot. Kind of continuation, though, of much of the trend if you're looking at the DAX future, really throughout the session. I can see here in terms of the DAX, we had that initial break of the prior day's low. This was during the European morning. And then it came back up to test that level, pretty much around that kind of 12,089 point in the DAX before then US came in and we started to drift lower, breaking S1. And then in terms of that volatility that we're seeing just around the latter part of the European session, it came back up to that S2 before then moving back down to around 150 point loss. US futures following suit. There hasn't been really one outstanding piece of news that has caused this. Certainly overnight in Asia, still a degree of nervousness over this situation developing on the Korean peninsula. Saw the Kospi in Korea underperform, and in general tone still slightly negative overnight in the Asia Pacific session. Slightly feeding through, certainly from a kind of classic risk play. Then obviously equities weaker. Fixed income futures 10 years setting up about 4.5 ticks. Granted now it's off its best levels, but managed to breach through the R1 earlier. And then likewise gold continuing to just punch higher. It's been a really strong rise in gold really ever since Trump started talking of a more aggressive tone. We've been rising really ever since, and some pretty interesting levels up around here that we've managed to punch through. One being, as you can see here, circle from where I was talking about it earlier. This is kind of mid-June, and this was the daily R1. You can see we snapped higher in the gold price through that point. If I zoom it in here, breached that level. A lot of people might have been playing that short, stops triggered, we ran higher, and then we've come back down to reside at around that point. Similar kind of story in oil, actually. We've had a initial rise through some decent technical levels of significance, only then to pull back. The price, as you can see, was being held up quite a bit around that 49.96, the high from the third, and also on the intraday, the R1 level. When we finally got our head above that point, though, we shot higher with a pretty quick run up towards, of course, this was through the $50 handle as well, up in towards R2, and then really the game changed over in the last 2 hours or so. Quite a dramatic pullback. This was also a bit of a drag for this equity move through the cash open and thereafter in the US equity space. With OPEC, a couple of things to be aware of because they did release their monthly report. Now, not pinning this exactly on the move, but certainly in context of things, it's worth being aware of the fact that in July, OPEC crude production rose 173,000 barrels per day. So compliance levels certainly are still proving to be a bit of an issue for OPEC, the OPEC 11 members. So I guess this is stripping out Indonesia, who are penalised for being part of the deal, and also Libya and obviously Nigeria, who don't have to abide by the cap at this point in time. But the 11 members of OPEC have a compliance rate of about 86%. And if you go back only about 2 months ago, that was well in excess of 100%. So it is slightly decreasing at this point, and so that would be obviously a bearish factor. Crude oil output mostly increasing in Libya, Nigeria, and importantly Saudi Arabia. So to be aware of. On balance, though, they did say that world oil demand growth in 2017 saw a minor upgrade. But overall, production values are higher. A couple of comments out of the Saudi energy minister as well today. Al-Fari said that talks with Iraq's oil minister stressed need to urge all parties to strengthen their commitment to supply cut pact. So nothing really too concrete coming out of the Saudi energy minister, but nonetheless we're always trying to keep on top of new commentary as it comes out. The other comments from the Saudi energy minister were that Iraq strengthening its commitment to oil supply cut agreement will reflect positively on global oil market. So obviously Iraq has been probably the worst at being least compliant with the OPEC cut deal. And so obviously Saudi trying to force them into becoming more compliant to lift the overall kind of cartel, if you like, the effectiveness of those cuts. Looking elsewhere, a few other things to be aware of. We've heard from a senior Fed official, and at the time did result in a bit of a reaction in currency markets. And although I was monitoring the news, I was on the move in between meetings at the time, I didn't actually see the charts, but I was quite struck by the change in Fed's Dudley's communication in just 1 hour period. You firstly had Dudley say that he expects inflation rising to about 2% over the medium term. This would be, you would think, then deemed as a hawkish comment, only to be followed 45 minutes later by him saying he doesn't expect inflation to reach 2% target in the medium term. He said year-on-year inflation measures will be depressed for a while. So I guess this may be a case of different news agencies taking different clips of a speech, but certainly two very contradictory statements from a senior ranking official, a voting member on the FOMC, slightly causing a bit of volatility late on in the currency markets. Otherwise, in terms of Korea and Trump, nothing really too much has happened there of particular interest. There was a little bit of movement of a US Navy destroyer in the South China Sea, but this is of course the South China Sea, where the US already have multiple military bases anyway, and I would say really the escalation would come if any movement into the East China Sea, so moving closer proximity to the Korean Peninsula and that key contentious area between China, Japan and Korea, that kind of triangle, if you like, in that area that would suggest an elevation in rhetoric in that response. Taking a quick look then at the calendar for tomorrow, and it's pretty much the most important day when it comes to US economic data. Just quickly, we did have some earlier today which did provide as well a short bout of once again some dollar weakness, that predominantly on the back of not the jobless claims. We're kind of fairly comfortable with the situation with that, where it's sitting statistically as a piece of data. The PPIs though came in a touch softer than expected. The PPI year on year 1.9%, and the ex-food and energy was 1.8% below the expected 2.1%. This is obviously as market participants start to gear up for tomorrow's CPI reading, which, as you know, even from what Dudley was talking about today, really epitomizes the fact that the Fed are very much focused on inflation as the key kind of defining area of the US economy that they want to see in order to follow this sequencing event of tightening the balance sheet and then eventual rate hike all before the end of this year. So CPI is really the big one. I would imagine then, barring anything unexpected occurring obviously on this Korean issue from overnight in Asian trading hours, it could well be pretty quiet as the market sits on its hands awaiting that figure in order to ascertain then the Fed's ability in order to execute on its predetermined kind of path, so to speak. Other things for oil traders, of course, we'll keep an eye on the Baker Hughes rig count. That's started to see, if anything, a little bit of a plateau of late. Likely given the fact that in recent weeks we've obviously flirted with the lower bound of the $40 handles. So that's something to just be aware of as well for people trading crude. Okay guys, going to leave it at that. Hope you've had a good and successful day in the markets. Have a good evening, and I'll see you again for the briefing tomorrow morning. Thank you very much.